Going on, guys? Kyle here. I just want to walk you through Nikkei Open, and I just wanted to kind of walk you through a little trick on how I handle Nikkei Open. So, the trick with Nikkei Open is, for the most part, all opens, when a market opens, it's usually going to have a push one way just to go the opposite direction. It's just kind of how it works. I don't know why it does that. It's just how supply and demand zones work. And it's just what price will do to you, right? So as we can see, so Nikkei is 1700 hours, right? Which is 5 p.m. my time. But if we look at price here, here's what this is 1 hour before. Like, we got the little pullback, and then here's the launch, right? So the launch is bullish for the pre-open, just to go bearish for the open, right? So this is nine times out of 10. This is just how opens work. If you go back and you back test anything, it's always going to have usually a push one bull to go bear, or bear to go bull, or bear to go really bear, or bull to go really bull, right? So a little trick to get in and out on Nikkei Open is wait 15 minutes after, right? So little things to notice. First of all is the hour time frame. What did the last hour finish off? Super bearish, right? The hour finished off super bearish. The 4 hour time frame is 1 hour until the when Nikkei opens. We still have an hour left until the 4 hours is done, right? So price, of course, we've been pushing up for a little bit. We can expect a retracement since we are in a zone right here, right? We can clearly see that. We can clearly see that price had reached a zone and it just touched it. Look, like head and shoulders wise, almost, right? Totally touched it. So you can almost expect a pullback, right? But most importantly is we check out the hour, and we see that the hour time frame. Okay, well, the last hour finished bearish, so you can expect that we're probably going to continue bearish movement, right? So if we go down to the 15-minute time frame, so here's 1645, which is 445, right? And then here's Nikkei Open, right? So what do we got here? What do we got here? We got a higher high. We got a lower low, right? So now all I did was look at price, and I'm like, okay, I already know. I didn't trade it today. I was driving, but I just kind of looked at it, and I was texting my students what I saw and what was happening. Whoops, this is going to be a LH, lower high. Right? So in this 15 minutes, look what price did. It made its 2-1 confirm to continue going bearish. We've got a liquidity wick here, right? Close small. We've got like no wick really down here. It's just pretty much count as hammer time. We do want to go down, right? So either taking any sells in this portion, because if we would have looked at the 5-minute, actually, I didn't notice the 5-minute till after. But if I was actually trading Nikkei and I would have saw this, so look what the 1700 did. Right at Nikkei Open, right? It closed no wick on a 2-1 bearish. On a 2-1 bearish, no wick. So sells anywhere in this whole area would have just been prime time, just knowing that it's going down because of this price closing no wick on a 2-1 confirm change of direction going bearish now, right? And then, of course, you just pull up your whole price range meter, and here's your profit target area, right? Stop loss and profits if you got them up here. But even just taking 7 pips home, I mean, if you open up 10 entries at 7 pips, guys, I mean, you just took home 70 pips just like that, So the whole idea is, trade what you see, trade what makes sense, follow market structure, pay attention to your higher time frames, right? What do we got? Another lower low. Another lower high, right? So it just, when price is in confluence, it's going to make lower lows and lower highs. I don't recommend trading off of the 5-minute time frame if you're not that great at Forex trading. The lowest time frame you should be looking at is probably the 15-minute. because the 15-minute has, of course, less movement because we have more candles embodied into one. So every one of these candles is 15 minutes, right? Well, you see this whole pullback right here, this whole pullback and everything that was going down was this candle, and this candle. These were one 15-minute time frame, right? This is what happened in that 15-minute time frame. So you can see how it just did this whole wick just to close here, right? And now we're going to continue going bearish. If we looked at the 15-minute, we can see 15 minutes after the open, there's your lower high, your first lower high. So we have 1, 2, 1, right? So we have 2, 1 now, and that would have been 2, 2 confirm, right? So 1, 2, 1, 2. Now we've got 1, 2, 1. That's 2, 1 confirmed to continue bearish, or just it's just confirmed change of direction, change of trend. And then this is your whole profit area. This whole area is just your profit target, right? That's what we're aiming for. That's what we're aiming for. 7 pips is huge, guys. If you can just get in and out with 7 pips, 5 pips, you know, I mean, that's where all your money's at, guys. And so where are we going? Let's pull up the hour chart and let's see if we've already. All right, so this is where we're going. Oops, what did I open up? Oh, that's the paint. Oops. You know what? This is getting ugly now. There's too much going on. You guys can just review this and you can see. So let's see where we're going. Let's look left a little bit. Right. Let's move this zone here down to this area. This is where we're going. There's really nothing holding it back from price coming all the way down here. Of course, we have hit this zone already, it seems, so we might have a little bit of a retracement as this new hour forms. But moving in, the new 4-hour candle just opened. How did it close? So, I mean, as we can just look at it, price is probably going to continue down onto the bearish side now. Let's look at the strength meter just to kind of see what's going on. Jappy is much stronger than the US dollar right now, so we can probably continue to see a little bit more momentum pushing down. But as opposed to understanding how these opens work, most opens are going to have a pre-push one way to push the opposite direction, right? And if we would have noticed this as well, if you're trading ahead of time, I mean, there's just your supply and your demand zones. So here's your beautiful zone up here. What did the pre-open do? Nice pull up here. Let's see what the 14 EMA was doing. Oops, I don't want this one. Price, actually it was probably pretty close, but the 14 EMA does act like a magnet. So, after it's hitting this resistance zone up here, you could expect a retracement. You never really know how far down price is really going to go in those moments. But, as you can see, if you just sell resistance, this was 30 minutes before the open. Boom, you're safe, good to go. Anywhere in this whole area. But like I like to trade Nikkei most of the time is 15 minutes after. And I would have been completely fine with knowing that my profit target was just around, 6, 7 pips, unless I was hyper scalping this 5-minute and I noticed that this closed no wick, then I probably would have been stacking sales even in this wick because we did close no wick on a 2-1 confirm going bearish, right? Change of structure. Now here's your lower high, confirm bearish momentum, right? Another pullback. So anyways, guys, I just wanted to kind of walk you through a really quick YouTube video for you just to, help you understand how Nikkei works a little bit. I'll post, I think I have some Nikkei videos, but I'll post some more Nikkei videos for you guys. Just so that you guys can understand a little bit better on how Nikkei Open works and how we can just maximize profits by following momentum. Just follow the trend, guys. Follow the trend, right? Another thing that might go down is we do have, I don't know, no, we're up here on this top. I can expect more bearish movement. So hopefully you guys got in and you got out. I like to hyper scalp, so I like to get in and out. I don't like to hold very long. I really don't like to hold very long. So just trading from, zone to zone during opens when price is going to make a push, that's the times that I really like to trade. So anyways, guys, hope you enjoyed my video. I'm going to go ahead and just put my info up here again. If you're from Instagram, thanks for watching. But my Instagram is the wolf. Whoops, the waffle. And then, of course, my Facebook is at Man Kyle Bray. I'm going to go ahead and hop off now, guys. I do have another webinar tomorrow. If you guys are watching this, free Webby tomorrow at 12 p.m. Pacific Standard Time. Again, Cali time. So if you guys want to join, go ahead. Send me a message if you guys want the link. I have it on my Facebook, but if you're not friends with me on Facebook, ask for the link, and I'll send you guys the link tomorrow. So it's just give me another hour-long webinar. I will record and upload it. So I'm gonna do a lot of Q&As for everyone. I kind of just want to go over Q&As and just help answer some questions that people have. I'll do some more market structure as well. But anyways, guys, thanks for watching my video. Hope you enjoyed.